Hi there, welcome to Kneppy Invest and welcome to a question and answer video. First one in about 2 months, maybe even more than 2 months. 2.5 months, we'll say. Pretty sure the last time I would have done one of these would have been towards the end of August. Yeah, so since we're in the middle of November, 2.5 months. Now, I've not gone through all your comments and questions over that 2.5 month period. All I've done is just go back the last week. Because if I went back 2.5 months, I'd probably make this video about 5 or 6 hours long, possibly even 12 hours long, and I'm not going to do that. Don't have the time. Well, I have the time, but I don't think I have the stamina to do that sort of thing. So let's go back 8 days ago to Just Acronym. Used to be called Just James Dean and Just Jim Cramer. Now it's Just Acronym, and they have not changed the name since then. Thank you, Kneppy. ASX the last few days, rather wobbly. Time to cash out. Get ready for market pullback. Load up on MTUM. And fun enough, I did a video on MTUM, which is a momentum ETF. And I actually did have to make sure I did that. I thought I did it. And yeah, so I released that on the November the 6th. Beta Shares Momentum ETF. One of the reasons I've included this comment is because, yeah, over the past week, it's become a little bit more than wobbly. It's on the precipice. We'll say it's on the precipice, the ASX. We'll have a look at the XJO. I pointed this out yesterday, that it's at a support level right now. Based on what happened on Wall Street overnight, I wouldn't be surprised to see a little bit of a bounce. There was a bounce during intraday trading on Wall Street. It opened down a fair bit, and that's actually quite bullish when you see a lot of buying coming in after it opens down. There's that old saying that amateurs open the market, professionals close it. So the amateurs are getting a little bit more panicky, and they're more likely to sell out on open. And then we saw a fair bit of buying coming in. Now, who was that buying? Because there is evidence over the past few months that the retail investors like you and me have been the ones buying and the institutions have been the ones selling. Is that a sign? I don't know. That could be a good sign. Or it could be that institutions are going to be wrong for a while, because this could be just a little bit of a pullback in a nice bull run. We don't know. But XJO is at a really important level right now. If it drops below 8,600, that would be me getting a little bit more bearish than I am just now. I do think we need a little bit more evidence that we're going to see a more major pull back. Okay, so thank you for that. And by the way, MTUM, this is the most recent chart. It looks fairly similar to the XJO, but not quite. This would be nice. It's only been around for just over a year, and I do like this sort of thing, if I remember correctly. Just looking at Beta Shares Australian Momentum ETF, I do like momentum. It makes sense. Okay, so thank you for that Just Acronym. I'm pretty sure you've got one or two other comments I'll be talking about. VB Ed says, welcome back, Kneppy. Did the US government shutdown affect you? I assume the national parks you intended visiting were closed. So when it was becoming more and more clear that there was going to be a shutdown, I was actually in Canada, and I was going across the border from Canada to the USA on either the last day of September or the first day of October. I forget which. And my first hike in the United States was in the Glacier National Park. And there was talk. There was this faction of people in politics who wanted all the national parks shut down. I read that and I went, no, I don't really care about all the visitor centers, that sort of thing. I just want to do hikes. That's all I cared about, doing hikes. And I didn't need anyone holding my hand, didn't need any rangers, that sort of thing. So sanity prevailed, and most of the national parks were not closed down, but skeleton crew. So visitor centers were closed mostly. On occasion, you would see a ranger, but not a lot. The only national park I intended to visit that was closed down was Mesa Verde. And there is a very good reason why that would have been closed down, or that was closed down. So Mesa Verde National Park has a lot of these really significant, what do you call it? Old Indian or Native American locations. So this needed to be protected. It needed to be protected because last time the national parks closed down, there was a fair bit of damage at Joshua National Park. People doing stupid stuff because there was no rangers, that sort of thing. So this made sense. They closed this site down because they need to protect this wonderful site, World Heritage Site. Yeah, anyway. So that fact was the only national park I couldn't go to. And to be honest, the only reason I wanted to go here was because there was a hike I wanted to do that had overlooked, it was a fairly good overlook, and it was a fairly short hike. So the very fact I couldn't go there didn't bum me out all that much. But other than that, my trip was not affected by the shutdown at all. Because I don't need to go to most of the locations that were shut down. So we're talking about visitor centres, that sort of thing. You might get tours from rangers, that sort of thing. Those were not running. I'm trying to remember if anything else. Nah, that was it. That was it. Anyway, Luca Brasi says, welcome back, Kneppy. Please analyze Pentanet, which is 5GG. I actually do own this one. I do own Pentanet 5GJ. This is in my super. And this is just one of these small companies, and I'm just owning because I think it's cheap and has potential to become much bigger. So when I say cheap, I'm talking about a market cap of we'll say $10 million. It's definitely not 5, 10 million, 11.26 million. And the company is operating cash flow positive. It's growing. It has a fairly similar profile in terms of increase in receipts that I saw with MyNet Phone 15 years ago. And eventually MyNet Phone just saw some scale, operating leverage, and they just grew and grew and then eventually got bought out. So the most recent pennies for Pentanet, I probably would like a little bit more growth. So we're talking about growth in customers, that sort of thing. So receipts, almost $6 million, operating cash flow positive, 594. Not free cash flow positive. They're still spending a little bit of money on capital expenditure and whatever other non-current assets is. So I would like to see this company to be free cash flow positive, but I do think they are close. And as I mentioned before, the one thing I'd like to say would be a little bit more of an increase in or greater growth in customers. So, so 5G subscribers up 9%. Yeah, I think there was a maybe. Here it is. Maybe this is the one I was looking for. Here, subscribers. Yeah. So a very slow increase in subscribers. I'd like that to increase mostly, if not completely, in Western Australia. Maybe they do have plans to expand into the rest of the state, but I do think they can be patient with that, because that could be one thing I would be a little bit against, is if they have a really aggressive plans to move across to other states, to expand across to other states, and that could lead to significant more cash burn. So at this point in time, I'm happy with how the business is going. I would prefer a little bit more subscriber growth. You can see total subscribers increased 1% quarter on quarter, 4% on previous corresponding period. So I'd like that to be a little bit greater, but a lot of their revenue is just it's renewing, isn't it? Because that's what they do. They do internet or provide internet services. Chart-wise, there's just no interest in this company from the market. And the thing that could change that interest would be operating cash flow, free cash flow positive, and growing subscriber base. So the main reason I'm in this is it's just cheap. There's no way this company is going to go bankrupt or anything like that. So the way I look at it is, in 5 years' time, will Pentanet more likely be $100 million company or zero? It's, for my way of thinking, it's more likely to be a $100 million company than zero. So the risks and reward, on a risk-reward basis, the risks or the reward, what's the best way to say it? The probability is in my favor. The probability is in my favor when it comes to Pentanet, just because of valuation right now. But chart-wise, you wouldn't be trading this at all. In fact, the share price has been drifting lower for a while. And I think if I do see this shift in momentum and trend in the share price, I might actually add to my position. So I do have a small position in Pentanet. But still, the business is moving in the right direction. Okay, thank you. Oh, Nick Patterson, I had to include this one because there was 9 thumbs up for this. The king has returned. I'm not sure about the king. We have missed your daily rundown. Thank you. Excellent news. Let's get rich. Yes, we sure have. So thank you for that. Thank you for all your kind words, not only Nick Patterson, but everyone else who wrote welcome back on my first few videos upon my return. So thank you very much. Just acronym. Here we go. Was it a free upgrade to business or on the flight back or pay? I actually did pay. In fact, I spent $1,000 to get an upgrade to business, and it wasn't a certainty I was going to get it. So when I found out I wasn't upgraded, I was like, yes, that was a good money spent, in my opinion. I would much rather spend $1,000 to get an upgrade from economy to business. It's worth it, in my opinion, worth it. And for me, $1,000, that's a good pay. That's a good value. That's a really good value. And yeah, so if you've never flown business class, by the way, on the way there, I just used points to upgrade. I've applied for upgrades 4 times and I've been successful 4 times. By the way, on the way back, the next day, the QF12, which is the Qantas flight from LA to Sydney, was cancelled. So I timed that to perfection, because if my flight was cancelled, they would have probably put me on a plane to either Melbourne or Brisbane, and then that would have been crap. Okay, so yeah, $1,000. Just acronym also says NVIDIA's next earnings, 19th of November. So that is in the upcoming week. If that's a miss, it's going to be Armageddon. I wouldn't actually necessarily say that. I heard Scott Phillips mention, oh, no, I don't own NVIDIA because the valuation is eye-watering. No, it's not. No, it's. I think people just assume NVIDIA's P/E ratio is like significantly high, but NVIDIA's P/E ratio is like 50, which is not high for a company growing like it is. And I think a lot of people are getting, I wouldn't say mixed up, but they're listening to people say that there's an AI bubble and all these companies are extremely expensive. That's not true. That is not true at all. So P ratio, 53.18, which is not that extreme for a company who just keeps on growing. In fact, their annual revenue has grown from 16.7 billion to 130 billion in the last 5 years, and profits grown from 4 to 73 billion in the last 5 years. Now, that sort of growth won't continue, but they're still growing. And we've seen other companies' management say there's extraordinary demand, like Microsoft. They had to increase their capital expenditure. Market didn't like that for some reason. And the reason they're increasing their capital expenditure because they're getting so much demand. And the other thing I would say about valuation, you could have bought Alphabet, not that long ago, for PE less than 20. Less than 20, which is ridiculous. Now it's probably significantly higher than 20 because the share price has gone a bit of a run. Yeah, look at that massive run. So Google's or Alphabet's P ratio right now is 27.53. The main reason it's like that now is because the share price is going to run. But you could have bought this company at a P ratio less than 20, and I thought that was really attractive. So I don't really think of NVIDIA as being overly expensive based off their growth. And I just think there's a lot of people out there who just think NVIDIA is just really expensive without doing any research on it. Now, if it is a mess, I don't think it's going to be Armageddon either, because it's not that expensive. It's not like Palantir. Is it Palantir who is really expensive? Now, in saying that, I think even this one, everyone keeps saying, oh, the P ratio is like 500 or 600. Yeah, 402.57. But I think that's on a low base. Let me just have a look. So, for instance, if you have a look at the profit, they became profitable 2 years ago. Profit last year was 209 million. This year it's 462. So profit actually more than doubled. There's a chance this company could double their profit again, and then double again, because revenue is not increasing as much. Pretty high margins, by the way. Anyway, so nice looking chart for Palantir. But this would be more expensive than NVIDIA. Okay, Jack Z6G. Can you do a chart on Zip and why it's down recently? I think it's just general weakness in tech. It's probably the simple reason. Now, the company did release a quarterly update. Let's just have a look at what the share price did on that quarterly update. 20th of October, so it was a fair while ago. They're doing a share buyback. I'm not sure why. So 20th of October, let's see what the share price did on that day. 20th of October, share price was actually rose on that day by 4.3%. So, and then it dropped the next day by 1.11%. Unless they released that announcement. No, they released it in the morning, share price rallied and fell. So let's have a look at the chart. The very fact share price rallied on the day means more than likely the market actually liked it, and then it dropped the day after. Now, in saying that, there was a little bit of selling on that day, and the share price did get to a high. So the one-day candlestick for that day, even though the share price did rise, is a little bit negative, and the share price dropped a fair bit. So you could actually argue that one of the reasons why the share price has found a bit of a has gone down a bit is because of that quarterly update. Even though it was initially received well by the market, share price actually has dropped since then. Overall weakness in the market, and I have put this onto my sell list. I'm trading this one. If we do see a little bit more selling coming in, so my sell point would be just there. So it's right on my sell point. I'm hoping there's going to be a bounce. But if it falls much further from here, I will be taking my profits with Zip. That's just me. By the way, it does look, yeah, this could be, we've seen these pullbacks in the past with Zip. So there's a little bit of a pullback back in August, more massive pullback at the start of this year. And if I remember correctly, the reason I bought on the 16th of April was because of a positive update from the company. So you have to be aware that this share price of this company can go on wild swings, which is why you either want to own it for the long term if you're confident on this company's future success, or you just trade it. Okay, I'm not sure why this changes. So I was up at this comment from Jack about Zip, and then when I went out of YouTube Studio, it jumped to another comment. I'm not sure why. Maybe you have to, maybe if I do this. Okay. Peter, so a lot of names usernames I don't recognize, which is good. Welcome back. I didn't realize how much I liked your ASX data rundowns until they were gone. Back at it with only 2 hours home. Thanks for the bank videos. Your dedication to your channel and viewers is unprecedented. Glad to have you back for your grounding influence while the market is crazy. Any thoughts on the recent DGL stuff ups and suspension? Actually, I did read this comment, and then I remember someone asked about DGL. So this is it. This is the DGL. I have not been following this at all, and because I was away, and I don't even remember if I knew they were in suspension. All right, so they went into suspension, looks like on the 30th of September, and the chart was actually looking really good there. The chart was looking really good. The only thing I'd like to see there with this chart would have been some higher volume. If we start to see some really good volume coming through, particularly the days leading up to the suspension, this chart would be looking awesome. So what happened? Now, I have not had a closer look at this. I can't remember. Yeah, I might have had one peek at it, but I can't remember exactly what's happened. So they went into a trading hold towards the end of September. Here we go. Oh, they delayed their annual report. That's it. Delay in 2025 annual report. Do they mention why? To allow the auditor additional time to finalize the audit. Additional audit procedures. What does that mean? Is there something untoward in there? Update regarding financial 25 results and disclaimer of opinion. So there's additional stuff. During the finalization of the audit process, additional payment to goodwill was identified. The first financial statement reflect total payment expense of 17.2, an increase of 3.2. Underlying EBITDA 52.1, 44.7 million positive cash flow from operations. Something about inventory matters. Okay, and their disclaimer, So stock take variances at two sites impacted by implementation of a new group-wide enterprise resource planning. Concerns over the potential for management override of controls as a result of the weakness in the systems of internal control and corporate governance processes allied to complex accounting and reporting systems. Okay, so this is one where well, you can't do anything because it's suspension, but what is happening? This is probably over my head. What's happening here, inventory matters, over my head, but I would be shocked if when the shares go back to trading, or they did a response to ASX query letter. Let's see what they have to say here. Okay, so the ASX do have questions about this, and this is long. I'm not going to go look at this in this video because it'll take me all day, maybe. Anyway, what you could do is there any way you can copy and paste the whole thing? I just want to. Is there any way you can copy and paste the whole article? So this is what I'm doing, copy and paste, new chat. Let's just do ChatGPT. Let's just do it. Let's see what ChatGPT says about this. Oh, wait there. I might read this later. Steps taken to obtain an unmodified opinion in future periods, inquiries made by the board. Okay. Anyway, so yeah, no thoughts at this point in time when it comes to DGL. More than likely, share price will drop, but I thought the same thing with Motorcycle Holdings the other day. In fact, Motorcycle Holdings share price has risen since then. In fact, yeah, the company share price rose yesterday. I thought this was going to be a sort of like a selling event for me, and share price rose yesterday 2.75%. So they went into Motorcycle Holdings went into a trading halt because of underpayments of vehicle registration duty. And I went, oh, this is going to be terrible for the company. Share price will drop, but it wasn't that bad. So it's going to be interesting to see what happens with DGL, but not paying close attention to that company just yet. And I suppose one of the reasons why it's in a trading halt or suspension and you can't do anything anyway. I just want to wait and see what happens. Draper says he likes these sort of reaction videos to Bell Potter, which cover a broad range of stocks at a high level, just enough to pique our interest if there are any we want to research for yourself. So what you're saying is you'd like me to do more of these reaction videos to articles like this, Bell Potters. There was quite a few companies there. So what about reaction videos? Livewise. Say a really good one would be Livewise Buy, Hold, Sell series. So would you like me to do reaction videos to 5 small cap hidden gems worth your attention? I could probably almost guarantee I have not read this, that at least 2 of these are not what I would consider small cap. And let's have a look. L1G. What the hell? Who is L1G? I've never heard of L1G. Is this new? Oh, it's a merged. Oh, this is a merged company. Just based off that announcement, it says merge group. Oh, is this yeah, Platinum Asset Management. Okay, it's interesting to see what they would say about this because by what else do they have here? Energy One, that's interesting. Orabanda Mining, Plenty Group. In fact, most of these companies I would consider small cap. So go both of these guys, and the buy, hold, sell. Anyway, so would you like me to do more reaction videos on these sort of things? I have done a few in the past, but maybe I should do more. 5 quality ASX companies this fundy is buying below their highs. Let's see, this one, I think I've read this one. Yeah, Pinnacle, Breville, yeah, I've read this one. ARB, A2 Milk, and Ampol. Okay. Would I consider those companies quality? Probably not. Not all of them. Maybe none of them. We all have different definitions of quality. Okay, so maybe that's what I'll do. More reaction videos like that. Well, Bell Potter stock picks for 2026. There's only one of those a year. Just acronym. Please review Steadfast. Below 200-week EMA, CEO under investigation. He's 78. Can't see him lasting much longer. Shares probably dips if he retires. And Sensei says, wow, some of these guys are living a long time. In fact, I mentioned that to my dad. He's above 80 and I'm 50. And the chances I get to 80, in fact, even 90, possibly even 100 are pretty high just because I got to 50. Anyway, Steadfast. Let's have a look at Steadfast. By the way, I do own AUB Group. And there was a takeover bid or something. So that's why share price has popped up. I have not sold it, by the way, which I usually do. Steadfast. Oh, what happened? What happened on the 31st of October? This is one that is in the back of my memory, bank, but I can't recall what happened with Steadfast. Oh, what day was that again? 31st of October. What was I doing on that day? I would have been either Zion doing Angel's Landing or getting close to Grand Canyon. Okay, 31st, address to shareholders. Managing Director and CEO stands aside. Okay. That's why the share price dropped. Mr. Robert Kelly. Tim Matheson, CEO Australia Asian Broking, to the role of Acting Chief ECEO. So the market didn't like that, huh? Market did not like that. Share price pulled back. There was a bit of buying on that day. Even though share price was 1 or 10% lower, was significantly lower on the day. Share price got to a low of 503, closed at 560. So there was 10%. The difference between the low and the close of the day was 10%. So there was a bit of a rally, which is usually a good sign. Share price has gone virtually sideways since then. If you have a look at the daily chart, share price is going sideways for the last 2 years, maybe. Long-term chart looks beautiful. If you have a look at the 200-week moving average, if you do consider this company to be high quality, which I think there definitely would be some argument, this could be a good time to buy because we have only seen twice the share price fall below the 200-week moving average. First time was during COVID-19, financial panic, and now, it fell briefly below back in April, which sort of makes sense, and now this. So this could be a good time to buy Steadfast. P ratio, according to this, trading view at 17.7, which seems pretty nice for Steadfast. I'm going to put this onto my, is this company high quality? And this could be a good buying. I did the same thing with a company called Constellation Software. I consider this company to be high quality, but it's still expensive. Share price has just gone through the 200-week moving average. First time it's done that since ever. But it's still pretty expensive, Constellation Software. But I was thinking about this. I was thinking, ooh, this could be a good buy. This could be good buying. Jason Lang says, welcome back, Kneppy. Love the channel. You have mentioned that you're holding a Zip. Just curious if it has hit your stop yet. Mine was triggered last week. Yeah, I've already mentioned Zip, and it is a very close to being a sell right now for me. Very close. In fact, if you have a look at the 200-week moving average, if you consider this company to be high quality, I don't, it would be a buy right now. But for me, this is more of a trading stock. What I do every single Friday, Saturday into Sunday is I update my buy-sell list. So all the companies I'm trading, I look to see if they're sells, and I have put Zip onto my sell list. Doesn't mean I'm automatically going to sell it. I'm going to have to pay a little bit more closer attention to this one. So other companies on my sell list include Catapult, Doug, MFG, and Superloop has hit that potential sell. So very close to selling out of Zip. Simon PT says, here's my 5 cents regarding the current bearish market sentiment. The more we hear about AI bubble, the less likely that one is being formed because investors are being more cautious. The fear for tech overvaluation defuels real bubbles. My latest buy, Zero, WiseTech, and is that Camplify? I am going to say right now, I absolutely agree with Simon. The very fact I am seeing so many podcasts about the AI bubble, and let's see if here's one, the AI boom, innovation or irrational exuberance. That's from Economics Explained. We had one What if the AI bubble doesn't burst? Well, that's a contradiction in itself. Here it is. But what if the AI bubble doesn't burst? That was the economy stupid. What else was there? Well, that's about it. Must have read all the other ones or listened to all the other ones. Oh, recent stock crashes. What the hell just happened from the Investing for Beginners podcast? Not really talking about a bubble though. Oh, why Peter Kodorski says AI is like every bubble all rolled into one. That's an odd lots. The very fact is a Santa rally cancelled this year or the Motley Fool money? So the very fact that there's just so much bubble talk out there, and I think because there's so much bubble talk, more than likely we're not in a bubble. We're not in a bubble. So that's the way I look at it. And the other thing I would say is a lot of these tech companies aren't that overvalued. I actually asked ChatGPT just do a valuation for a lot of these companies, and even ChatGPT says it's not that. It's neither cheap nor expensive. It's about right based on some of the growth these companies are experiencing. And I think some of these pullbacks in some of these tech companies like Xero, WiseTech can maybe not Camplify. I wouldn't put Camplify in the same bracket as those other two companies. But I think this is an opportunity. So what we'll do now is have a look at Xero, because I do consider or would consider Xero and WiseTech to be long-term holds. I don't care about what's happening with WiseTech right now. If you have a look at the weekly chart for Xero, it's gone below the 200-week moving average. So in my opinion, this is a buying opportunity for Xero. And WiseTech's probably the same, maybe even more so. Yep, so WiseTech is below the 200-week moving average again. So I would consider this to be potentially good buying for both of these companies, if you think these companies are high quality. Okay, Michael Jib, a lot of new usernames I haven't seen before. Welcome back. TA on MTM, TLX, LDX, ALR. Please. When I first read this, I thought it was TAR, like saying thank you. Thank you on MTM. I was like, oh, you're welcome. Then I went, oh, no, that's technical analysis. Someone said all these companies are dogs, so I would disagree with that. Maybe a few, I don't know. And then there's a bit other stuff here. No, I would not say dogs are good. Dogs are great. So maybe your definition of dogs is these companies are great because dogs are great. So MTM. Now, some of these, Metallium I would classify Metallium as more of a story stock. So just because a stock is a story stock doesn't necessarily mean it's a dog stock. I'm not even sure how I would define dog stock. But this is definitely a story stock. So some of these companies are story stocks. Well, at least one of them is a story stock. And the reason I say that, this company has no revenue. No revenue. And for me, it's just around the story. So for me, what is driving, in my opinion, the share price of a lot of these companies or story stocks is sentiment. That is what driving the share price higher or lower. It's really hard to actually give a valuation to these companies, because when you can give a valuation to a company, the share price is being underpinned by value. So if this company had revenue, profitability, and the share price fell to a certain level, you could say, oh, this company's looking cheap based off their financials. You can't really do that with Metallium. So you're relying on sentiment. You're relying on the market understanding that there is a lot of potential for this company. And even then, you might not see the share price rally because it's all based off sentiment. And the best way to judge sentiment is just having a look at the chart. So let's have a look at the chart for Metallium. And when I say chart, I mean price, action, and volume. And you can actually if we go back with Metallium, you can see a spike in volume on the 21st of August. Share price on that day rallied 64.86%. But we need further increases in volume. We saw that in November, so 1 year ago. So really good increase in volume. Share price broke out at 10 cents, and that was the start of the rally. And you can see consistent, really good volume. Volume has sort of slightly increased over the past say a few months. Now the share price has pulled back. Now, because this company has a market cap of 470, I thought it was going to be higher. Share price has pulled back almost double, has almost pulled back 50%. And what I'm looking for here is any sign that the pullback has come to an end. And I'd love to see some big volume coming in. So what I'd like to see is a good green candlestick and some really big volume, which is telling me that the market, is falling back in love with this company. So if we don't see the volume coming in, if we see volume starting to dry off, the market has moved on. The market has moved on. Sentiment has shifted. They've found something else to play with, and share price could just drop and drop and drop, sort of go down very slowly, because there's going to be a lot of investors who hold shares in this company and love this company, make so much money, and as the share price drops, they go, oh no, waiting for the bounce, and the bounce never happens, and eventually either they sell out when the share price has fallen a fair bit, or they just keep on holding for as long as possible. We're just waiting for that bounce. So this is starting to get a little bit more serious. Now, if I was trading this, I'd probably, now it all depends on what you're looking for, what your confidence level is. But if the share price fell below, first one would be 62.5 cents, and the second one would be 55 cents. If it fell below that, that's breaking the support level that was formed back in June, not that long ago, June, July. But if the share price falls below that, that would be a negative sign. The reason 62.5 cents is not as strong is because that was just one day. Share price fell one day and then rallied again. There was a little bit more support back in June, July. So that would be a sort of a negative sign if the share price falls below that. There was a few big red days back in October, and that is something else I would look at. There was a big 17.7% drop on the 17th of October, and there was a fair few big down days. Oh no, that was the biggest down day by far. That's, for me, is also a signal. When you see these when your share price is in a rally or in an uptrend, and then you see a really big down day like that, that could be a trend killer event. It's a little bit more subtle in this one, but it's definitely there. Sort of reminds me of, what's a good one? Oh, Droneshield. This one's a really good one. Droneshield, if not recently, we go back to this one. Share price in a really good rally. You can see all these gap ups. That was a sign that there was a little bit too much exuberance. And then all of a sudden, we had a big drop, 22.3% in one day. That was sort of the get out of this. Get out of this. You don't want to see that sort of red candlestick day on pretty big volume as well. And then the share price dropped a fair bit. What happened the other day with Droneshield was just directors selling all their shares. I know, so that's MTM, Metallium. What else do we have here? Telix. Oh, by the way, I do own Telix and Ludox, or whatever it's called. ALR, we'll do ALR. I don't know anything about this one. So this is Altair Minerals. Oh, what is happening here? I am going to get rid of this one. Okay. Is this a recent listing? Yeah, this is a recent listing. And unfortunately, the whole reason, one thing I don't like about TradingView is there was another company listed on the ASX back in, before 2018 with the T code ALR, and TradingView won't recognize the difference between the old ALR and the new one. So it includes the old chart. And that's why we have these, these moving average lines. It's like the blue one just coming down. It's one thing I really don't like about TradingView. Can't distinguish between the two. Okay, so this is the recent chart for ALR. I think this is a pretty good chart. Recent got to a new all-time high. Maybe not all-time high. Yeah, I think it's an all-time high. Really nice. The last 2 days on selling in the over market, share price of this company has reached that all-time high at 2.4 cents. We saw this first peak in volume on the 5th of August. That was a good sign. And the share price, we haven't seen much selling at all. And when I say much selling, I'm talking about enthusiastic selling. The way you can see enthusiastic selling is, what's a good example? We'll go back to Zip. So you can see volume hasn't been that substantially higher, but the share price has been dropping over the last 2 weeks. Why has the share price been dropping? It's because the enthusiasm of the buyers is higher than enthusiasm of the sellers, or enthusiasm of the sellers is higher than the enthusiasm of the buyers. And what I mean by that is the sellers are more likely to sell on market, which will push the share price down. And the buyers are saying, hey, the sellers are selling on market. I can put a price in lower than where the price is now, and there's a chance my price will be hit. So they're less enthusiastic to buy on market. And that is what drives the share price higher or lower, is buying on market. Not putting a price limit in or limit order in, it's buying on market. Because if the share price, let's have a look. MTM. So if you go to the summary, you can see there's a buyer at 70.5 cents, the seller's at 71.5 cents. Now, if you have enthusiastic buyers, the share price will immediately go up to 71.5 cents because they have to, because that's the first price they can buy at. But if the sellers are more enthusiastic, so say this one seller at 71.5 cents, so there's one seller, 100,000 shares. If he really or she really wants to sell, they will just dump on market and the share price immediately drops, 41, drops to 69 cents because they're just keen on selling. So that's why selling on market will push share price higher or lower. Enthusiasm is what drives that. So sentiment, enthusiasm. So let's go back to ALR. I don't know anything about this company. First time I've ever looked at it. A lot of shares on issue, it looks like, just based off buyers and sellers. In fact, we can confirm that. ALR. 5.16 billion shares on issue. So that's a lot. That's one little negative thing I will have about this company. Maybe it's more than little. Now, in saying all that, we said some good volume coming in. Share price keeps on creeping higher. This is a classic looking uptrend. So you see the share price rally, then pull back, rally, pull back, rally, then pull back. The pullbacks, the volume has been quite light mostly. And then when the share price rallies, we're seeing some pretty good volume. And we've seen that in the last week. Some nice little volume increase on a nice little rally. And the share price got to 2.4. I do like this chart. Apart from that, I know nothing about this company. Olympic Domain project update with BHP. Ooh, name dropping. That due to a recent capital raising didn't affect the share price at all. And they probably would have increased the amount of shares on issue by a fair bit. Do they say how many shares? That would be a lot. Almost 1 billion shares. Okay, there you go. That's probably my only red flag about this company is, well, there's more than that. I don't know anything about it. They're probably a story stock. But again, the chart looks good. Just by looking at the chart. The two companies I do own, Telix and Ludox. Telix. So this one has been in the walls recently. They did release something positive on the 15th of October. You can see what happens when a company share price is in a downtrend and they release something positive. You're going to see increased selling. You're going to see increased selling. The share price can't rally. Can't rally because increasing shares on the market because, I can get out of this dog stock. Even though I wouldn't consider this company to be dog stock. That's the mentality. We saw it with the reply, all dogs. So a lot of shareholders a lot of investors would consider this company to be dog stock because the share price has dropped. That's it. That's the definition of dog stock. Share price has dropped. It's the dog stock. But anyway, I think there's a chance the company has share price has reached a floor, but I'd need confirmation on that. So I don't like this chart at all, even though I'm a shareholder at all. So there's no reason to even think about. By the way, when would I have sold if I was trading this? Probably at the latest in June, mid-June. But you can see the share price really struggled to get new highs in April, May. So that could have been a selling point. And finally, what's it called? Loomis. I still think this is a good chart. Company making announcement on the 16th of July, share price rose 144.83%. I bought just after that. Even though share price dropped 4 days later, the next 4 days, to me, that was good buying. This was, for me, a company making event. And the share price has more than doubled since then. Share price has been fairly volatile, gone as high as 28 cents, as low as 17 cents. Maybe first signs of share price struggling to get to new highs, but not there just yet with Loomis. By the way, this company is a real company. They are selling stuff, and if you have a look at the most recent Appendix 4C, I don't think they're operating cash flow positive just yet, but $5.3 million in cash receipts. And if you take away the government grants and tax incentives, they're not operating cash flow positive. But if you include that, they are by 1.8 million. So I do like this company, and they made that massive deal in July. Okay, so that's it for Michael Chambers. APAP says, over the last 5 weeks, most of my stock have fallen. Just going to bring up my timer thing. My what do you call it? The stopwatch. That's it, stopwatch. So let's see how long I've been going for. 45 minutes. Over the last 5 weeks, most of my stock have fallen between 25 to over 50%. Wowzers. Droneshield, Electro Optics, SGQ, MTM, just to name a few. Things are looking to keep falling until next half year reporting. The best time to buy is always tomorrow. The one thing I would say is a lot of those companies would be, I would say storage stocks, but a lot of them are driven by sentiment. Sentiment is driving a lot of the share prices higher and lower. And that is one of the tricky things when it comes to these type of companies. And that's why I do think trading these sort of companies is better than holding them for the long term. Because if you're a really good trader, you can get way more out of these companies. For instance, Droneshield, if you're just trading this one, you could have been buying and selling on all these, like buying when the share price was going from 30 cents to $3, then out, and then buy back in March of this year, and then probably you would have been out by now because the share price has pulled back a fair bit. So for me, this is more of a not my favorite chart at all right now. But if you rode that momentum, the share price was running higher. And then just when you would have gotten out, that's probably the big question here, because you rode it up. You can see the share price dipped a little bit, but the last time the share price dipped, you can see the share price going sideways for a long time. That's a good sign that the bottom had been reached, but we didn't really see that with Droneshield. And what's the other one here? Oh, by the way, Electro Optics, similar vein to Droneshield. If you have a look at the most recent Appendix 4C, burning through a lot of cash. By the way, I do own this one. It's in my super. It will always remain in my super. And yeah, they burned through $34,000 just in operations. So you're going to see from quarter to quarter, this company is going to have a really good quarter, a really bad quarter, very capital intensive. And this company, because of what they were doing, it was beloved for the market for a little bit of time. And I think this would have been a better trading stock. And the breakout happened on the 19th of May. I still remember that going, oh, maybe I should trade this. And I was like, nah. The share price went from $1.45 back up above $10. Wow. And now has pulled all the way back to below $5. And I think this is moving more into a downtrend, because we saw the share price dropped, then it tried to rally, dead cat bounce, and now it's gone below the previous low. So this is now moved into more of a downtrend. And SGQ, did I do that one right? SGQ, I got the Q and G mixed up. St. George Mining. There's another chance that this one has run its course. Maybe less signs, but you want to see a new high. Now, the share price really went on a good rally in the middle of October, like a 2-day rally. And it seems like that was getting a little bit toppish. So not surprised to see the share price has pulled back a fair bit for that one. This one has a market cap. Oh, for some reason I thought the market cap was 3.33 billion, but that's shares on issue. Another company with a lot of shares on issue. It's a mining exploring company, I'm assuming, and the shares on issue could increase by tenfold from here. Maybe not tenfold. It could go up a fair bit. And that's the problem with these sort of companies is I'm assuming they did a capital raising as well, because that's what they should have done. Let's see if they did. Apparently they made an acquisition. I can see a lot of quotation of securities. Let's go back 3 months. Option holders. Looks like they haven't done a capital raising recently, but... Oh, no, wait there, sorry. 72.5 million raised for Raxa Rare Earths niobium project on the 13th of October. Yeah, it's exactly what they should have done. Can't believe I missed that. It's right there. And that's the 13th of October, and that is perfectly timed. That's after the share price had rallied a lot. So they did exactly what they should have done. So I've got to give it up to the management. Oh, and Bradley McDonald says EOS Electro-Optics reached its FVG. What is FVG? FVG. Fair value? What's G mean? Fair value gap. Ooh, I'm going to read more about this. Thank you, Bradley McDonald, for giving me something to read about. Just Acronym says, please consider daily Q&A until the backlog is cleared. Yeah, that's not going to happen. I'm sorry, that is not going to happen. No, there's going to be no daily Q&A. I'm sorry, Just Acronym. And he also mentioned how Michael Burry is bearish on Palantir, bought over $912 million worth of put options. This is partly due to the company's extremely high PE ratio. And Simon PT says Michael Burry is a one-hit wonder. He's made more wrong calls recently than right calls. He made one right call. I actually do agree with Simon in a way here. He's made one right call, Michael Burry, and a lot of his calls recently have been quite wrong. He's been very bearish the last few years, and that's been the wrong call. So I actually do agree with Simon PT here. And maybe the call on Palantir is going to be right, but it does look expensive. But if the company grows at a fair bit, maybe it's not that expensive. And when I say a fair bit, I mean doubling profit every year for a few. Okay, Fishball says, welcome back. The bull market continues. EHL is going to wake up. Monadelphous just had a biz update and an upgrade. EHL, which is Emeco. And I'm pretty sure I talked about Emeco the other day, didn't I? I don't know why. Because this could be a nice little buy. Oh, that's right. The share price rose on Friday, 3.38%. I don't mind this chart for Emeco. P ratio says 8.4. Is that right? So TradingView says 8.4. And let's just confirm, maybe not confirm it, but I'm just going to have a look at Commsec. P ratio 7.6. Dividend yield 1.56. So there could be a reason behind that. Could be a one-off profit. Nice daily chart. The only thing I just mentioned is these sort of companies I would not consider high quality. Let's just have a look at the weekly chart for Emeco. You can just see that with this weekly chart for Emeco going back. Well, that's a daily chart. If you have a look at the weekly chart for Emeco, this is not the chart of a high quality company. It goes all the way back to 2006. And yeah, but in saying all that, you can still trade these companies, and I will, because they do go through periods where conditions are favorable for their business. And Emeco might be in that position right now. Maybe not might, probably is in that position right now. Dan Bag, welcome back, Kneppy. Good to see Meeka Metals get a mention. What did you think of their quarterly report last month? I'll be honest with you, I did not have a look at it. Have not had a close look. Probably had a very brief look at it. Looked really promising to me. First gold sales, starting their stockpile, production costs came in underestimate. Management keep kicking goals in my view. KT3 and says, yeah, I agree. They're executing well. So my two small gold miners are Meeka Metals and Kaiser Reef. I actually do prefer Kaiser Reef just because I think it's cheaper. No, better value. That's probably a good thing. Better value. But I've been holding Meeka Metals for a while. And it's gone up a fair bit. It's gone up. It's probably more than doubled. I'm trying to remember. I bought it at 9.4 cents. Yeah, 9.4 cents. So it's more than doubled, almost tripled. And the market cap of the company is 687.17 million. The chart looks pretty good, so no reason to sell it just yet. And someone actually did ask me whether I must have mentioned I put Meeka Metals into my super. I just want to confirm that because I'm assuming it's not. And when I read that comment, it went, "Ooh, there's a chance I did that. I just can't remember." So I'm just going to have a look at my super on my other computer. And I just want to see if I do have Meeka Metals in my super. No, it's not. It's not in my super. I probably thought I'll do that, put it into my super, and then never did. Kaiser Reef's in my super. I probably got the two companies mixed up. So Kaiser Reef is in my super, and Meeka Metals is not. So Meeka Metals is still in my superhero account. Yeah, so I probably got the two small gold companies mixed up. And I'm doing fairly well with Kaiser Reef. It's up 33%. No, 50%. Yeah, 50%. So Meeka Metals, what I'm going to do is have a look at their Cash flow problem. So what I do with these, that's probably why I haven't had a close look, because I've just gone through all the appendix 4Cs. I have not gone through the 5Bs for mining companies, and I'm not even sure I will do it. So if I went through this, I can't remember going through this at all. They're still a little bit short of where I want them to be right now in terms of operating cash flow and free cash flow. So they're still burning through a little bit of cash, but there could be reasons behind that. But I think there's no reason to be selling this, because the other thing I like to look at is gold production exceeded plans. I do remember reading this now, because I remember reading exceeded FS startup plans, and that is a good sign. And the other thing I remember is all-in sustaining costs were, I thought, pretty good as well. So I remember reading that. Okay, so cash and gold at 59.3 million, up from 55.7 million. So I do like this one. One of the reasons why I do prefer at this point Kaiser Reef is simply, if you have a look at Kaiser Reef's, they had, I wouldn't say similar production profiles. Actually, no, I should say that. So Kaiser Reef had or produced 8,000 gold, and a little bit higher than Meeka Metals. But if you have a look at the valuation of both companies, Meeka Metals is 687 million, but Kaiser Reef, and by the way, Kaiser Reef share price has gone on a bit of a run and has pulled back. Kaiser Reef has a market cap of 169. Now, there might be reasons behind that in terms of future mining, that sort of thing, mine life, that sort of thing. I haven't gone into in depth, but I bought Kaiser Reef when the share price was going sideways. And the main reason I bought it was I thought it was really cheap. And even though the market hadn't discovered this, I thought eventually the market will. And the market discovered this company in August. You can see a massive volume coming in towards the end of August. And that is when the share price just went on a nice tear, a really nice pullback recently for Kaiser Reef. Anyway, so I'll have a closer look at Meeka Metals. Actually, in fact, what I might do is compare Meeka Metals and Kaiser Reef, but both of those companies are doing really well right now. Small cap gold miners. In fact, I'm pretty sure there was an Ausbiz episode with Meeka Metals mentioned. I should listen to that, because I only listen to a few Ausbiz calls anymore, maybe one every 2 weeks. Capel Seth says, hi, Kneppy, great video. No, not great video, great video, as usual. I'm not sure what a video is. Maybe it's something I've never heard of. Say the chart of Atmos is different in Commsec. Odd, is it? Let's have a look. Well, it's going to be different because I have different, what do you call it? Different things on it. Like in Commsec, I have 4 moving averages. So the four moving averages in Commsec are 125, 50, and 200. And I think the main reason I have that is because I just don't want to change it from daily to weekly. This chart looks okay. If we have a look at that, if I put on 200-week moving average, now one is 6 months, Commsec is 6 months, and if I make this 6 months, they should look fairly similar. One is a little bit more stretched out. Volume sometimes can be quite a bit different, and the main reason behind that is because Commsec includes CHIST or CHISEX, and I'm pretty sure TradingView does not. So TradingView had 16 million shares traded on the 11th. 16 million. Oh, they both had 16 million. Okay. Anyway, they look fairly similar to me. I don't know. By the way, the chart looks pretty good. Noobs Pro, what are your thoughts on Telix? Well, I've already answered that, haven't I? Telix, but this is not saying TA or FA. I'm a shareholder of Telix, so I have no reason to sell out of this one at all. And I think eventually this could be, markup is only 5 billion now. It says the PE ratio is 322, but again, this is a case where you can see the profit quadruple over the next few years. I I still think there are risks when it comes to Telix because they're a one-product company, if I still remember correctly, and that product could be disrupted. For instance, Clarity Pharmaceuticals, what they're doing. There's one of the reasons why I bought Clarity is just the potential of disruption to Telix, but not there yet. But TA-wise, it's not the best looking chart, but maybe we've seen a floor with the share price at about $14, $13.50 to $14. Maybe that is a floor with the share price, but we need confirmation on that. Oh, here's the one on Meeka. So before you left on holidays into the US, you mentioned you had put Meeka into your super. Is this still the case, or are you trading Meeka now? Can you explain your process you take when considering if you're going to hold this for the long term in your super? So I might have said Meeka and then I meant Kaiser Reef because Meeka is not in my super. I just had to check. And Kaiser Reef is. So maybe I got them mixed up. So for me, Meeka, Kaiser Reef, the reason I bought Kaiser Reef was more valuation than chart. The reason I bought Meeka was more of a chart, more of a TA. I haven't really seen any reason to sell Meeka just yet, just based off TA. So in fact, you can see when I bought, you could even argue I bought too late with Meeka. Share price broke out in July 2024 at 4 cents, and I bought when the share price had more than doubled. But I just liked this chart. Got to the party late. You can see the increase in volume as well, and I just like that. And yeah, no reason to even think about selling. And I haven't transitioned this to my super, and probably I won't. I don't do that too often. Sometimes I will because I make a decision that then I'll go, maybe I'd like to own this for the longer term than just a trade. So I haven't got to that point with Meeka. And one of the reasons probably why is I don't think it's great value. Unlike Kaiser Reef, which I do think is good value. Medical investor, did you see Fluence? Appendix 4C has been looking really nice. I had a very quick look at this one. In fact, it might be in my 4C lists. Let's have a look. FLC, it is 30th October. Put it down. So I wrote down all the 4Cs I liked when I was overseas, and this one made the lists. And I'll have a closer look when I get to it. And the other thing I'll mention about Fluence is the chart is looking really good. So let's have a look at the announcement. Appendix 4C quality. So this is another water management company. Water company. We'll just say water company. So operating cash flow positive by 2.2 million. Pretty sure they've had a really good, year to date, 9 months. Operating cash flow positive 7.1 million on $67 million of receipts. And I do like they're repaying debt. So they have a little bit of debt, 18.5 million, repaying a bit of debt, which is really good as well. Now, the thing that gets me is operating cash flow positive, free cash flow positive. Things are looking pretty good for the business. So what is the chart looking like? And the chart looks pretty good. Yes, in fact, more than good. This is another case where you can see definitely a trend or shift in trend and sentiment in this company. And that happened back in July, August. If you had confidence that the trend was definitely trading, you could have changing. You could have bought this at 6 cents and have doubled your money. But I do like this chart. The one thing I maybe don't like is the volume. I'd like to see some bigger volume, but we did see a bit of a subtle volume increase back 6th, 7th, and 8th and 10th of November. So that could be a good sign. I do like this chart. I'll have a closer look at their business, but it looks like things are moving in the right direction for medical investor. Jack Chart says Domino's has a positive update today. So was that on Thursday? I don't remember that at all. Domino's Pizza announcements. So they had the AGM or Wednesday, so it was not marked price sensitive, which is a reason I might have missed it. Let's see what the share price did. Share price went up 11.6% on the 13th. So there was no... the AGM address and presentation was released at 3:42 p.m. It would have been back to trading at that point, just. So maybe there was something in the AGM address and presentation the market liked based off what the share price did the following day. Let's have a look at the chart for Domino's. Is this getting interesting? Now, the P ratio, there's no P ratio because they're not profitable. They didn't get profitability last year. Let's have a look. Oh, yeah, they were slightly negative. But if you go back, this company had profits, we'll say $100 million. Very rough. This is a really rough way to do it. Market cap is $2 billion. Yeah, P ratio of like 15, 20. And we've had a moving average crossover. Is this the time to get excited about Domino's Pizza? The low was about 14, so share price has already gone up 50% from the lows. Is the worst end for Domino's? I'm not willing to go there just yet, maybe. I don't know. I'm not sure if I'm willing to go there just yet. This could be another sort of a false dawn for the company. They've had a few of these in the past, with things looking positive on the chart, and then things just fell flat. Robert John Reed says, bet your dogs were happy to see you. Well, my dogs are happy to see anyone. My dogs would be happy to see Bundy, Ted Bundy. Oh, my dogs would be happy to see a polar bear ready to eat him. They'd be like, polar bear, let's be best friends, polar bear. Yes, my dogs are happy to see well, except small dogs. Really small dogs, they're not that happy because small dogs tend to be a little bit more yappy. But literally, my dogs, when they see a horse, a cow, any sort of animal, they're excited because they think, a new best friend, which makes me a little bit sad because when they see me, they're really happy. But it's like, are you happy to see me or just happy because you're seeing a person? Anywhere Rome says, what super do you use where you buy, or you can buy Swiss stocks? My net wealth. So it's net wealth. I've got it up here in my other computer. It's net wealth. What's it called again? Super accelerator. Okay. Super accelerator. Super accelerator personal super. So if you go to super net wealth, super, you have almost complete control over your super. Super Accelerator Plus for retail superannuation investors. A lot of flexibility in this one. Range of investment options. Access Australian overseas listed securities, 400 plus managed funds, managed account models, term deposits, and cash. Online portfolio management, clear and simple fees, etc., etc. So Australian listed securities, every single listed security you can buy, and many international securities. They do have a list here. So this is a list of exchanges you can buy and sell shares on, but you can't sell and buy shares on every single exchange. For instance, they do have a list of approved securities. So this is probably the one downside I do have. But if you want to buy one of the bigger companies, one of the better companies you can do. So if you have a look at Switzerland, Swiss Stock Exchange, it'll give you a list of all the companies you can buy on the Swiss Stock Exchange. And here he goes. So fair few. So Logitech, Novartis, Nestle, what else? Roche Holdings. A lot of chocolate ones here, by the way. Swatch Group, Swisscom, UBS Group, VAT Group, Zurich Insurance International Insurance Group. So if you want more control over your super, this is a good way. And you want to buy and hold foreign companies for a long period of time. This is one of the reasons I got into net wealth. This is it. I would say there's probably more super like this out there on other platforms. Hub24 maybe, I don't know. So that's how I can do it. Net wealth, super accelerator, you can buy Swiss stocks. You can also buy, let's have a look, what else can you buy? New York Stock Exchange, NASDAQ, London Stock Exchange, Toronto, Euronext, Paris, Deutsche, Euronext Amsterdam, Hong Kong, Switzerland, Tokyo, Brussels, Copenhagen, Stockholm, Singapore, Italy, and Spain. Okay, Sensei says, Kneppy, your thoughts on Warren all-you-can-eat Buffett, saying in his final ever investment letter that all his success in picking high growth stocks over decades were due to randomness, so-called luck, and not because of his skills and analysis. Ooh, some of his disciples won't like to hear that. I think he's being modest. But in saying that, a lot of his success has been just in a few companies, and he has made some bad decisions. But again, who said it? Peter Lynch said you only have to be right 60% of the time. I think Peter Lynch said he's only right 60% of the time. Right amount 60%. Let me have a look. Peter Lynch said investors only need to be right about 60% of the time because the winners can make more than make up for the losers. Yeah, so this is absolutely true. If you're really disciplined and you don't take profits as much as you should, as much as a lot of people do, then you don't have to be right all that often. And it's one of the reasons I hate it. I saw this on a Facebook group. Someone said, should be taking profits. I'm up 20%. I should take profits. And I just wanted to reply, let it run, because you'll never get rich by always taking profits. It's the reason I hate that saying, you can't go broke by taking profits. Well, you can't get rich either, because if you're always taking profits, then your winning positions will be like 20%, 30%. And some of your losing positions might be 10, 20%. So you're not going to make much money if you're always taking profits. You got to let your winners run as much as possible. This is why this only have to be right 60% of the time is relevant, because let your winners run. And there's mathematics behind this. Absolute. You don't have to be a genius when it comes to mathematics. You know the upside of holding a company for long term. 100%, 200%, 500%, 1,000%, 10,000%, 100,000%. It's infinite. But the downside of a company going bankrupt is zero. You only lose 100%. You can't lose 200% or 300% unless you lose leverage. So this is why I really hate that saying, you can't go broke by taking profits. Well, you can't get rich either, and you're more likely to lose money if you adhere to that sort of that saying, because you're always taking profits. And more than likely, if you're always taking profits, you're holding on to all these losers who are losing a lot of money, and there's a chance you're going to be lose money in the long term. So I think he's being modest. If he did say this, I'm not disbelieving you, but I did read once that most of his money were just by picking a few companies like American Express, Coca-Cola. Let's see. I'm going to put this into ChatGPT. Your thoughts. I'll get rid of Kneppy and just put your thoughts. Let's see what ChatGPT 5.1 says. There you go. Okay, so ChatGPT is saying Buffett inherently was lucky because where he was born, the time he was born, but he started investing really young. Lucky to meet Munger. He was lucky to find early mispricings in a pre-internet world. Yeah, but that is not the same as saying my returns were a random flip of the coin. So I sort of agree with that. He because he had success over a long period of time, it was not random because he was always successful. If his success was random, you would not see 60 plus years of market beating performance. Yeah, exactly right. Go ChatGPT. Why he might say this: humility as a teaching tool, protecting people from survivorship bias, a final philosophical statement. What that actually shows, if we treat Buffett's track record statistically, our performance is so large over so many decades, through so many regimes, in so many different types of investments, while using transparent, repeatable criteria. Even if 10,000 people flip coins or pick stocks at random, you do not get a Buffett. Academic papers have tested this. Buffett's returns and Sharpe ratio are too extreme to be explained by luck alone. Okay, so they keep on going, ChatGPT. So I sort of agree with that. I think he's just being humble. Slide 9, slide glide. The behavior of Droneshield directors are akin to what we've seen from Kogan, director of the years, opportunity selling from insiders. And then talk about Lycopodium, a new way to play the gold space. I'll have a look at Lycopodium in a second. The way I look at this is, if these directors, these insiders really believe in the company, there'll be no way they'll be selling. There'll be zero way they'll be selling all their shares. Maybe some. but not all their shares. So this does, for me, is a massive red flag that these directors, these CEOs, and Ruslan Kogan actually don't fully believe in their companies. They don't fully believe they can make it. If you go to some of the big tech companies in America, I doubt any of those directors ever sold completely out because they went, oh, this, I'm going to make a lot of money. So, yeah, it does make me think that the directors and these CEOs don't believe the company can make it. Maybe not make it, but they won't be as successful as what the market is thinking at that time. And Lycopodium, another potential, what do you call it? Mining services and something else. Chart does look nice. I do like this chart for Lycopodium. After being a bit iffy for a while, the other thing I would also say about these sort of companies is, in my opinion, this one has been a nice little long, not really. If you go all the way back, actually, we need to look at the weekly chart. Go all the way back to listing, this actually company's done fairly well, but it does go through booms and busts. And the last bust was in 2016. And that is a problem with these sort of companies is they're still they're still reliant on the mining cycle. And when the mining cycle turns negative, these companies will be hammered. Lycopodium share price went from $7 all the way down to a low of about $1. And quite a few mining companies did not make it out of that period, 2015-16. So again, not long-term holds, more of a trading companies, Lycopodium. That is Lycopodium, isn't it? Yeah. I did not trust myself then. Oh, a really good comment from Trader Hooper. Quite often, directors will add some commentary to their selling, for example, to meet tax obligations or divorce. The lack of comment from Droneshield directors is another red flag on the pile of red flags, which have already been covered. I have heard a lot of, a lot of speculation about why they sell. And one of the bits of speculation was tax obligations. But because I didn't mention it, we just don't know. And that's speculation. For me, it's 3 insiders selling all their shares at the same time is a massive red flag. And research backs that up. In fact, research suggests large insiders selling large amount of shares is massive red flag. Any research? I read this research many, many years ago, and I've realized I could actually just ChatGPT and see if ChatGPT can find it for me. I was looking for a lot of research I've read in the past, and ChatGPT says yes. Okay, so it's giving me papers as well, inferring bad news from insider sales. So I'll have a look at this later on. But I just remember reading this. This is a massive red flag. It's a red flag when a group of insiders sell at the same time and they're selling a large amount of shares. There's no argument against it. The only argument I saw in Commsec is in Hot Copper is they've done this in the past. I was like, if they completely sold all the shares in the past, how do they have more? It's because they're just gifted all these shares by the company. And that, for me, that's not a good thing. Okay, 6 meter says something interesting about Zoono. The irony of Zoono is they have excellent product range that I've used for years and save lots of times and money. It's also last a long time, which is probably downside. Yep. One to watch if they actually start to get good revenue from supermarkets, but as you often say, still a story stock. Trader Hooper, I've always loved Zoono as a customer, just not an investor trader. I've only traded it once during COVID. Yes, so I'm still following this company because I do think if their product is wonderful, you can see share price just going bonkers in. Oh no, that's way past. Going bonkers in COVID-19. Share price went to a high of 250. Whoa, they made a lot of money. They made a lot of money, but unfortunately, things could be drying up. I don't mind. I just need some proof. I don't like this one-day candlestick. A lot of selling, 40% down. So definitely a company to put in a watch list, but I need proof that, they're selling more stuff. And I need that to be consistent. Astronomic says, thoughts on REA Group right now. Interesting enough, I listened to a podcast with Scott Phillips, who said REA is way too expensive now with Technology One. Both companies have a PE ratio of 100. I was like, yeah, Technology One has a PE ratio that high, but you're wrong on REA Group. You're wrong on REA Group. So Technology One, PE ratio of 85.8. Share price has dipped. That's probably why it's below 100. Now, REA Group's PE ratio is like 45, 39. Share price has dropped a lot. Okay, so Scott Phillips and his crew made a significant mistake with REA Group. I'm going to show you that mistake right here in Fiscal AI because that was a one-off. Why is this not working? Log in, Fiscal dashboard. And this is why you just can't look at 1 year's numbers and infer anything from that. So if you have a look at financials for REA Group, and if you go to the profit net income, you'll see the profit last year was 302.8. I'm pretty sure there was a one-off, and this year the profit was 677.9. I'm pretty sure there was not a one-off there. So let's just go have a look at REA Group's most recent annual report or annual numbers. And I'm pretty sure they released that at the start of August. And here it is, Appendix 14 annual report. And I remember looking at the P ratio of REA Group, and it was fairly high, and then I went, no, you can't look at the P ratio of this company right now because that's distorting the valuation. And then lo and behold, I heard Scott Phillips say, wow, we put REA Group as a sell because we thought a P ratio of 100 was too high. And I was like, no. I just remember thinking that, but I could be wrong. So I'm just going to double check. Notes. Here we go. So here's a profit and loss statement. So last year the profit was 293. This year 669. So profit more than doubled. There we go. But if you have a look, yeah. So last year there was an impairment. This year there was a positive impairment. So last year there was a negative impairment. This year there was a positive impairment. So you rub those out, and last year's results were not as bad, and this year's results are not as good. So P ratio of actually 39 might be a little bit higher than it should be, but definitely not 100. I was shocked when I heard that, 100. And if you go back to here, and if you have a look at the P ratio, I don't think it ever got to 100, but it got close. Go have a look at the P ratio. You'll see the P ratio was high, and then all of a sudden it dropped. We have to get rid of income. And yeah, so yeah, it was 100. Got to 100 in August of 2024 when they released their results. So for some reason, Scott Phillips and his crew went, oh, P ratio is 100 back then, we got to sell. And that thought has just stuck with him since then. Now it's 39.17. It was a weird comment because I thought an expert would not make that sort of mistake. Anyway, so let's have a look at the chart for REA. Look, the company's fine. Their update was fine. One of the reasons why I actually do own this one is I do think it's a growth company, but they're moving into India. I think that's a significant growth company, and they're still growing at a nice rate. Chart-wise, in fact, what we're going to do, because I consider this company to be high quality, we're going to have a look at the 200-week moving average. 200 moving. Is this a buy just based off that? And it's getting there. It's very close. So I held this for the longest time. I originally bought this in 2014. Maybe it was 2013. And then I sold it in 2021. And then I bought back in. So if you look at how long I've held companies, this is my longest hold. I just thought it got really expensive, and then I sold, and then I bought back in, and I've realized, well, I don't want to be too huge with buying and selling these sort of companies. I did that with JB Hi-Fi, and I'm still regretting it. So I thought I'd just buy back in. I didn't even know about this 200-week moving average. Buy high-quality companies, the 200-week moving average, more than likely you do very well. and I just bought above that, and the share price for RA Group is just above the 200-week moving average. If the share price falls to $190, I think this probably is a buy. And for me, this is more of a RA Group is more of a long-term hold than a trading stock. Aaron Briggs, thoughts on Life 360's week? I'm on the fence. I think this is a negative move. So I did read a little bit more about this. I was a little bit surprised share price did drop. So I don't consider Life 360 to be high quality. So I wouldn't use the same factors in considering whether Life 360 is a buy or not. For me, it's more of a technical thing. Now, I would, based off the growth and potential growth, I might consider having Life 360 as a long-term hold, but not as a high-quality company, just because it's significant growth. But I still consider this more of as a trading stock, and the reason is what's happening recently. Now, the reason share price has dropped a fair bit on their update is because of a lack of growth, or much smaller growth in customers. So that could be a good first sign that this company has reached saturation. I don't know. And that's why the share price has dropped a fair bit. Share price has, dropped 20% or 30% maybe. Let me see if I can do the quick maths. So if I say 15, 19, it's dropped almost 33% or 30%. Some big volume coming in. So we have seen a bit of selling. So for me, the uptrend has definitely come to an end. That's what I got from this. And also a Trenkler event. For me, the uptrend has come to an end, so I'm not trading this. I wouldn't trade this right now. In fact, if I was trading it, I'd probably be out. Just acronym says, ING held the line last 2 days. It's a sign. Let's have a look. If I remember correctly, there was a bit of buying coming in. Yeah. So there's a bit of buying coming in the other day when the company released whatever, because we had Capital Reef saying share price had plunged or whatever, and it didn't. And we can see that just with the one-day candlestick, a lot of buying coming in. And there's buying just because of that shadow. And when I say buying, people always say, well, if there's buyers, there's always sellers. But it's not buyers and sellers because they always need matches. It's the enthusiasm. So when you see this sort of candlestick, the buyers are really enthusiastic. They see the share price get to 230. They go, I've got to buy this, buy and market. And the sellers aren't selling on market. So that's why you get the share price going up. Which makes sense. If there's no sellers on market and there's only buyers on market, the share price has to go up. And the share price has held firm. Yeah. I have no confidence in Inghams Group, which way the share price is going to go. It would be a tough business as well. And Accent Group getting cheaper, target $1.10p ratio. I'm not going to talk about the last one. I actually had a look at this. This was my main thought as well. Accent Group is starting to look to get to an attractive point. So my buy-in for Accent Group would be just above $1, potentially. I'm not sure if I would. The company saw the share price get to $1 back in 2022, 62 cents during COVID-19. And I do think this P ratio currently 12.1. So I do think there is potential that this company is getting to the point where it's cheap that I wouldn't even think about using technical analysis. Maybe. I still have to think about it. But the chart looks horrendous. Still looks horrendous. So it could drop a little bit more from here. But this is why I'd have more confidence in this than, say, a story stock who has the same chart, because there is financials underpinning the chart for Accent Group. Because at some point, you're going to see value investors going, ooh, there's good value with Accent Group, and that should support the share price of Accent Group. With Metallium, share price could drop 50% from here, 75%, 90% from here, because there's no fundamentals underpinning the company. There's nothing. And when I say fundamentals, I mean profit or revenue. There's nothing. I've heard some people say fundamentals means other than that. That's not true. Well, that's not how I look at fundamentals. Fundamentals to me is financials. Anything other than financials is not fundamentals. It's more of the story of the company. So resources and stuff like that. Stoic Wisdom, do you think Technology One will fall further from here? Also, could you please share your thoughts on the AVM chart? Technology One, will I think its share price fall further from here? Okay, I'm going to be blunt. I do own this one. And what I'm going to do is put the 200-week moving average. Oh yeah, so the first thing is the share price is well above the 200-week moving average, but the share price tends to be well above the 200-week moving average for this company forever. It dipped below the 200-week moving average back in 2018. That was brilliant buying for Technology One, because if you have a look at the history for this company, it just never drops that low. Now, the share price had gone on a really good run since I bought it. And I do think this company is expensive. P ratio 85.83. So what we have with Technology One is there's definitely an argument that there is overvaluation when it comes to this company. So the share price could drop a fair bit from here and still not be considered cheap. Also, technical analysis, share price is now in a downtrend, in my opinion, and the share price could keep on dropping. So to answer that question, do you think Technology One will fall further from here? I don't have a time machine, so I can't definitively answer that. I do think there is potential. Doesn't mean it will, but I think there is potential. So the way I look at it is probability. And I think the likelihood of the share price dropping further from here might be a little bit higher than what I would like. Now, on Friday, nice little candlestick, but that's just a one day. So just based off probability, I think there's a chance it will. But there's no guarantees when it comes to that. And that's another thing a lot of people don't understand about technical analysis. It's not saying, technical analysis does not say whether the share price will go up and down black or white. It's not black or white. There's a lot of grey there. It's all based off probability. Is this likely to go higher or lower from here? And the chances could be 70 to 30 or 80 to 20. When it's 50 to 50, when I don't know, I'm usually out. Sometimes, a lot of times I just don't know. But for me, Technology One would be probably, there's a good chance, probably more than 50-50 the share price will go down from here, just based off TA, based off valuation, that sort of thing. Also, share your thoughts on AVM. What is this? Is this vanadium? Oh, no, advanced metals. Okay, so a nice little pop-up on the 19th of September. Let's have a look why it popped up. Doesn't really matter. 19th of September. Oh, there was just a share price went higher because they had to issue a price query. So just noise. Well, maybe not noise. There could have been something else. Oh, it actually did answer question one. There you go. You don't usually see answer to question one. So the company also engaged East Coast Research to undertake a report on the company. This report was released publicly this morning and may also account for recent increases. I'd say that's the reason why. That's the reason why East Coast Research released something on the payment from Advanced Metals, and that caused the share price to rise. Some people have said that Advanced or East Coast Research will buy in on these reports, but I'm not sure that's absolutely the case. So that's why the share price rose, and that's why the share price rallied, looks like. Share price had dropped a fair bit from 18 cents, so more than halved. And there has been a little bit of a bounce. Whether this bounce continues remains to be seen. We saw a little bit of volume coming in, but I think the company needs to release something positive again, something else, something really positive. Something really positive to get a little bit of momentum back into the company share price. But yeah, this is sort of play I would never touch. It's just all based off sentiment and based on sentiment in the market. And the share price of Advanced Metals, I could see it dropping all the way back down to 4 cents. I could see going on another really good rally. Could go to 40 cents. And it's all based off sentiment, whether the company releases an announcement or not, how the announcement is treated by the market, that sort of thing. So, yeah, I think I would like to see a little bit more confirmation that this little dip has come to an end. So I'd like to see the share price go a little bit higher. Looks like 10 cents is still acting as a bit of resistance here. So maybe share price getting above 10 cents. But I wouldn't be surprised to see the share price drop below the recent lows either. I'd like to see some volume coming in. That's another thing. Okay, that's it. I think that's it. That's it. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.